So going to the next level on the technical, right? The key drivers. This is far more complex than anything which is even on the fundamental. Even if we include all the four fundamentals together, this becomes the complexity is very different because the numbers here are not very these are much more abstract. When we say abstract, it is trend, right? So trend, a human eye can perceive trend in a very different way. Two person can look at a very different way. The same trend, right? One may think it is good, it is bad. Some may be saying neutral, right? So when it comes to algorithms, this is far more complex and is very well tested as well. So key technical indicators, industry standard, some of them we use, right? OHLCV, overlays, lot of overlays, and lots of things like patterns. There's no formula for pattern. There's no formula for trend. There's no formula for support and resistance. Right? Of course, you do have certain basic formulas, but those are very, very basic. Right? If you're looking really at something, so this is an extremely complex process and a very well tested and very used thing. Technical strength, right? Same thing. So hiding all the complexity behind, what you get is a number between 0 to 100. It's very easy to test as well because just looking at the chart, you can see that, where does it fit, right? Technical strength index in TSR, very similar to fundamental profitability you see in the equity page, pre-screened, custom screener, right? So all those things are pretty much similar. Analyst looking for swing trading, what you should be looking at? Swing traders, intraday, EOD, short term, right? Everybody who's on technical world, right? They should be looking at technical strength. Combined use, aggressive analyst, technical and growth. That's the best because you have support of growth. So you'll feel that, and technical is also good. It should give you more confidence. But generally, technical analyst, I'll be a little more on an extreme side, right? They hardly care about the fundamentals, right? So all that they care is basically whatever. So from technical analyst perspective, intrinsic value, right? Somebody mentioned intrinsic value, right? The intrinsic value or the fair value is the price at which the stock is trading today, right? Technical analysts always believe they don't look at the fundamentals, right? The hardcore technical analyst, right? What derives the price? It is basically the supply chain, right? And the supply chain factors in everything. It factors in liquidity, it factors in management, it factors in government policies or dumping, anti-dumping, war, epidemic. It factors everything. So at that particular point of time, right? All these parameters, global macroeconomic parameters, right, decide demand and supply. And demand and supply decides the price. So from technical analyst perspective, the fair value is always the price at which the stock is trading at that point, right? And the price is pretty efficient, right? Maybe in some of the session, I'll take technical analysis, some of the key concept of technical analysis. But at that point of time, that is the fair value, right? So generally they don't do it. But if you want to look aggressive, conservative, then perhaps you can look at the growth also, right? You should be looking at technical strength. So when it comes to return, right, it is never absolute, right? It is that, okay, my stock is giving 17% return, I should be happy. Well, yes or no. Happy because it's giving you better returns than FDs. But you should also be looking at, is 17% good enough, or it should be looking at 27% or 37 or 47%, right? So that's how you need to do. So relative strength will come and help you there, right? How is it performing vis-a-vis a certain index? For example, if it is, let's say HDFC Bank, right? You should be looking at HDFC Bank. Also, you should be looking at where the Bank Nifty is going, right? So that way, right? If you're looking at, let's say a Nifty 50 stock, right? Okay, Nifty 50 is good, but where is Nifty going? Where is, let's say a particular stock, right? Let's say TCS. TCS is going up, right? It's giving me a 20% return. But if Nifty is giving 21% return, then that's a bad investment. So that's where relative strength comes into play. There are a few examples out here. If you are defensive, always add stability, right? Because at the end of the day, you don't want company to go down, right, forever. If it is a stable company, then at some point of time, it is definitely going to bounce back. So strength index, right? You can choose the tick that you are looking for, whether it is intraday, 5 minutes, 15 minutes, or you're looking for a more like a long term, like a weekly or monthly, right? Believe me, a lot of technical analysts also look for a long term thing, right? It's not that technical analysts only look for next few days or two. A lot of technical analysts, they view the chart and they look for multi-baggers also, and technical analysis also helps you to find them, right? Intraday trader, they should be looking at 5 minutes, 15 minutes. Right? Momentum traders should be looking at 2 hours or daily tick. Right? Swing traders also 2 hours daily tick is a good one. Right? 1 month tick is more of positions, and perhaps 1 month and 1 week also. Right? That should help you to take the position calls. Index range, same thing: green zone, red zone, and gray zone. Right? We try to keep it consistent for all the strength index, right, as much as possible, even though they got evolved at a very different way, different times, but eventually we consolidate them into one single framework. Now, apart from the fundamentals, right, fundamentals generally for long, right, in technical world, right, if it is red zone also, right, it's an opportunity to a lot of traders, right. So this is where if you feel that you can take the risk, you can take the stress of short selling, then I mean, there's another area where you can look at is future and options. That's where you can do short selling. You can buy, you can take put calls, you can do shorts trade. Right? So not recommended for everybody. Especially it is for the ones who have very strong heart. Apart from a lot of deep pockets, the heart has to be very, very strong when you are going in the short side. Okay. Any questions? Yeah, Swapnil, your question, right, is basically it is combination. Certain indicators give you red, certain indicators give you green, right, at the same time. Now, that is where we try to do smoothing. So technical strength index, right, what it does is it eliminates all the outliers. What it means is if there are about 20 parameters, right, 2 of them are extreme, then what it does or what it impacts is basically just looking at them as a primary tool, right? It can give you very wrong results, and it can, like for example, right, I mean, including me, about I have lost money on overbought, oversold stocks because just looking at overbought, oversold, right? In your initial days, what you look is overbought, oversold. Like some of the questions which came is intrinsic value, right? If it is below intrinsic value, it's a great thing. Or if it is overbought, then start shorting. Or if it is oversold, start buying. What you need to look at is the trend, right? So one of the things, I mean, of course, not the point of discussion here, but let me also tell you that thing, right? Over here. So basically, if you're looking at, let's go to custom screener, do it yourself, overbought, oversold. Right. So let's say you're looking at RSI, right? For example, if it is above 70, right, which is overbought, and then I add another RSI, right, where it is trending down for at least, let's say, 3 days. Right? What we are trying to identify here, Swapnil, is basically it is in overbought zone, but by adding another mixture here, is we are trying to see that where is the direction of RSI. We are not talking about price direction, right? Just the RSI direction. So what it tells you is basically find the price where the stock price is clearly overbought, right? But the RSI is falling, right? So this is where the signs of weakness have started. Right? I hope it is coming there, right? So even though it is in strong, this thing, purely from RSI perspective, it is trying to go down into go down, right? If you see here, again, this is coming down. It is in seriously overbought zone, right, for a very long period of time, right? But you see that there's a sign of basically exhaustion, right, of this trend. If you see here, there's a sign of exhaustion. Right? So you should mix and match a lot of things. Just looking at one number, whether it is intrinsic value, whether it is RSI value, You have to look a lot of things in perspective, right? Now, how do we help here, right? The way we help you here is basically we try to get all these factors together in a single number, which is TSR strength index. Now, looking at the strength index, it is still bullish, right? Even though RSI is falling, right? Overall, it is still bullish. So that's what we try to do it. We try to smoothen out things. Great, you got it.